Right on time, actually, Maggie. Look at that, 4 o'clock, right on the dot. Welcome, everyone. My name's Doug Shear. I'm one of the board members of UASA, and we are grateful and happy to have Matt Ray with us from Merchant Cost Consulting. I almost feel like we spoke at one time, Matt. And you
I think we have,
guys,
yeah.
I think so as well. And so you guys are potential partners with us in business, right? To help us optimize our credit card processing fees. And it's not even that we have to come with you, that you will negotiate those situations with our companies and assure us that we have the best rate. And I think you also help us with disputes and things like that. And so everyone, I just want to welcome Matt, and we appreciate you spending the time with our association.
Doug, thanks for having me. I appreciate the intro. So I guess I have a presentation that I want to go over with you guys. I know that this is it's not the most fun topic to discuss, right? It's very boring. It's very dry. It's not interesting. But I will say when it comes to affecting the bottom line of your business, it is something important and something that should be noted. So I'm going to try to make it as, I don't want to use the word fun, but as interactive and high level as I can. And obviously, if you guys have questions along the way, feel free to put them in the chat. This presentation will also be shared afterwards. If you guys want to email Maggie, Sarah, or Doug to get it, you can have access to it as well. But I'm going to share my screen.
Yes, you're good now. Thank you.
Oh, perfect. Okay, so let's
Appreciate
get the
everyone's
show on the road. All right.
Yeah, thank you, my friend.
Cool. Yeah, sorry about that, everyone. So, yeah, background about me. My firm, Merchant Cost Consulting, we've been around since 2016. I used to work in the payments world since 2016. And what MCC does, this is kind of the agenda I want to go over, is what we do, the average cost to accept credit cards for your type of business in the appliance repair world, looking at different hidden fees. So I'm actually going to show you guys some statements and some fees to look at and look out for, right? Go over a case study of one of the big players within your industry, and then just kind of have an open discussion. Or obviously we can end it there, and I can answer questions at the end of this, right? So the background about myself, I went to Bryant University. It's a small school in Rhode Island. It's a business school. When I graduated, this isn't something that you go to school for. It's actually something I kind of just fell into. In short, I had a friend of mine who's working in the city of Boston. That's where we're located. And he was working for a pretty good-sized payment processing company at the time, got the job, worked my way up the ladder. And essentially how it works in the payments world is the higher you set the rate on a company, the more money you get in commission, right? So it doesn't align with the business owners like you guys. You guys want, obviously, to accept cards because that's how your customers pay, but you want it to be at the lowest overall cost because it's a business expense. Complete opposite, obviously, as a sales rep within the industry. The issue with that as well is that these companies that you see, iPayment, PaySafe on this slide, major processing companies, you'll see Fiserv, First Data, WorldPay is another big one out there, Global Payments, Heartland, the list goes on. The issue with those and what put a bad taste in my mouth is that rates are increasing at all times. So you as a small business owner, even a mid-sized business, you're looking at this stuff, rates are always going to increase. And what put a bad taste in my mouth was as a rep, they were doing it behind our backs. They were increasing our customers' costs. The customer would contact us and be super upset. And I would have nothing to say because one, I didn't know what was happening, but two, it was, affecting the bottom line of all my clients. So we launched Merchant Cost Consulting in 2016 where we could leverage the knowledge that we have of payments to help business owners like yourself learn how to reduce and eliminate different types of merchant fees without the hassle of having to make any changes to your existing point of sale system, your ERP system, whatever you have in place, right? And that's kind of where we are today and what we do. And a background about payments, right? It's super complex, and I don't expect everyone to follow with me because this is kind of the nerdy stuff that we know, right? But there's, on a very high level, certain fees that you can manipulate and negotiate, and then there's certain fees that you cannot, right? And how it works is every time that your business accepts a credit card, whether you manually enter the card over the phone, whether you're manually entering that into a point of sale system or you're swiping the card, right? It doesn't matter how you take it. There's rates that are called interchange rates. These are the things that you as a consumer, when you use your credit card, get like the frequent flyer miles or their cash back or the rewards programs. Those things are called interchange rates. And they're set by the banks in which you have a credit card at. And in short, those fees are passed along to your payment processing company every time a card is swiped at your business or used at your business. And that payment processing company then passes those fees on to you, the business owner, right? You are incurring those costs. You can't do anything about them. They're non-negotiable. They're set, unfortunately, and they're pretty expensive. But there's 750 different cards that are issued throughout the world, all have different rates. And you as a business owner, it's just the cost of doing business, right? But there are ways that you can manipulate costs in certain situations. There's also different pricing structures when it comes to accepting payments that a lot of people don't realize, right? So when you're talking to your payment processing companies, they're trying to issue you a rate that makes them the most amount of money. A lot of those rates and pricing structures are deceptive. I have a bullet point listed here called tiered pricing, right? It's super expensive. If you hear that, run the other way. But this is one example of a pricing structure that your payment processing company may try to push onto you because they make a ton of money, and it may sound good at the time, but when you get your merchant reports at the end of the month and you see the total fees that your business is being charged, it can get really, really expensive. I have a couple others listed here. Interchange Plus pricing, really good for your business. Flat rate pricing is self-explanatory, right? It's one fixed percentage rate for every transaction that you guys process, but it can be expensive in certain situations, right? These are all things, and I'm trying to keep this high level, that we look at and evaluate when we're helping our clients and helping you guys reduce the fees that you pay. But the one takeaway that you should get from this slide is, what should my business be paying? If you have, you're looking at all the different types of fees that you as a business owner have to evaluate every month, quarterly, annually, right? What should my appliance repair shop pay? And in short, the easiest and most simplistic answer I can give you is that when you take the total fees that you're charged at the end of the month and you divide it by the total sales that you process, if you are priced correctly, you should be within the ballpark of 2.2, 2.5%, all in. We call it an effective rate, right? If you're not there, chances are you're probably, I won't say being overcharged, but there's savings to be had, right? Now, we've seen appliance repair shops and retailers, for that matter, pay upwards of 3.5%. It depends on who you're processing cards with. In some instances, how you're accepting those payments, whether you're swiping it, tap to pay, the chip, manually entering it through your website. So many different scenarios. On top of that, if you have some type of software integration, a lot of people who use First Data use Clover, right, as their software, so to speak. Or if you're maybe a larger appliance repair shop, you're using NetSuite as an enterprise resource planning tool that integrates with a credit card processing company. So many different situations, right? All of those factor into the costs that you're ultimately going to pay when it comes to accepting credit cards for your business. Now, I'm transitioning, so this slide specifically is actually some real-world examples of statements, they're screenshots that you may get every month, right? All statements are going to look different. They'll resemble something similar to one another. They're supposed to show all the different cards that you accepted for your business, meaning Visa, MasterCard, Discover, American Express, the debit versus credit transactions, how many transactions you actually processed, sales, all this stuff, right? It almost looks like a bank statement, but it's for your credit card processing. This is a real-life example of a major processing company and how they showcase their reports. And a lot of this is like reading hieroglyphics, right? It's a completely different language. You as a business owner have 1,000 things that you're doing. This is one area of expense. And to learn how it works is pretty complicated and takes a lot of time, years to understand. But these are the things that we're looking at, right? These are the things that we go line by line through for our clients, right, to help them alleviate costs, reduce the fees that they pay. And highlighted here in yellow are just some areas of overcharging, price gouging, if you will, that the processing company is going to try to charge you guys, but you may not be aware of it because, again, it's difficult to understand. And again, here's another example. It's the same processing company, but because they have two different divisions, their reporting is different. And this is also what leads to the deceptiveness within the payment industry. All credit card processing companies, like I said, have similar reports, but all these different fees that you see listed may be named something else depending on the processing company that you use. Again, making it super confusing, super difficult to understand. Even companies like Square, Stripe, PayPal, they're all in the payment umbrella, and sometimes their reporting is a little bit easier to understand. But when you peel back the layers, this is all the raw data that we look at to help you guys reduce the fees that you pay, right? And just an example here, I don't know if you can see with my mouse, but in the bottom right-hand corner, here are some areas that we also help with. PCI compliance, making sure that you guys are accepting credit cards the correct way and doing it within the compliant standards within the industry. It's a big fee that gets mislooked a lot of the times, or overlooked, I should say. It's very easily avoidable. That, in addition to monthly costs, surcharges, padded rates, again, all this high-level stuff that I'm talking about, of where we try to help you guys reduce the fees that you pay. I have a case study here. So Big Sandy Appliance, they do some repairs, right, which I know most of this group does, but also from a retail standpoint, they're selling different types of appliances and appliance products, and they're massive. And in short, they were using a company called Fiserv, which is formerly known as First Data. They had their own point-of-sale systems, right, that they were using, and they reached out to us to help them evaluate their credit card processing, but also help them negotiate a better contract with their current processing company, right? And you can see some of the stats here on the left-hand side. Now, Big Sandy, they have, I think it's over, 15 retail locations, and then obviously a big service department. But it doesn't matter whether you're a retailer, a repair shop, it's irrelevant. If you take credit cards, this all is going to apply to you, right, for your business. And the savings can be substantial. Typical cost savings is around 28%. So if you look at the fees that you guys currently pay now, you can expect a 28% on average cost savings that we're able to achieve our clients. It's all relative to your current fees that you're paying, the sales that you're doing. In this case, Big Sandy, it was a smaller amount of cost savings, but they're still saving over $36,000 a year in just fees alone, right? That can pay someone's salary. You can put that money back in towards your business to do marketing initiatives. If you're the business owner, take a nice vacation. There's so many instances where these found savings can be achieved, right? And that's what we're here to help our clients do, essentially. And to wrap this all up, right, and I can take questions at the end if there are any, my company is here to help you guys reduce the fees that you pay, but also audit and police your monthly statements moving forward to ensure that the savings we achieve your business stays in place. That these rate increases that I was talking about, if they happen, they don't happen on our watch. And that we're constantly making sure and keeping these payment processing companies honest to give you the best deal possible. How my firm makes money for doing all this, because again, we are not a payment processing company. We have no affiliation to any credit card processor. How we make money is we take a percentage of the savings that we successfully achieve our clients, right? It's the same way a personal injury attorney might work. If they win the case for you and they're able to collect a big lump sum, they take a percentage of that. It's the same thing with us. If we can't achieve you guys any cost savings in the merchant fees that you're paying, you don't owe us a penny. There's no financial risk to the business, no financial burden. It actually becomes more of a waste of our time than yours, right? Because we're actually allocating resources to try to negotiate your costs. And for us, the biggest difference between us doing it, let's just say, versus you as the business owner trying to negotiate a better deal. And maybe you do have a really good deal, which is great. You don't have access to hundreds of thousands of merchant reports and data to understand where you should be priced based on the market, your type of business, the amount of sales you do, the transaction size, your SIC code, all these things come into play, right? And that's a lot of the stuff that we're leveraging when we're working with you to help you negotiate a better deal with your current processing company versus you guys just have access to your own raw data, right? Your own statements, which doesn't give you enough leverage to potentially get the best deal possible. And, obviously we're here to help you guys as much as we can, save you as much as we can, and we can do free consultations. We can look at your statements, give you a rough analysis of what the cost savings look like to see if it even makes sense to engage with a company like us. But we're here to help you guys reduce the fees as much as you can, especially in, the economic environment that we have today where interest rates are through the roof and everything's expensive. Our job is to help you guys hopefully lower costs, right? So that's my spiel, Doug. Obviously, I'm happy to take questions as they come in, or if there aren't any questions, I'm happy to, you guys can reach out. My contact information is here. But anything I can do to help you guys is really the goal.
Yeah. So I was wondering, can you kind of walk us through quickly what it looks like when we reach out to you? What's that process like?
Yeah. So as far as like the step-by-step basis, if you email me, let's just say, Matt, hey, I want to connect. Great. We'll hop on an initial consultation call. I'll get a better understanding of how you guys process payments at your business because obviously everyone does it differently. And then in short, you can send me your last quarter's worth of statements, right? Your last 3 months worth of statements that we can evaluate to see, okay, here's their up-to-date pricing. Can we save you anything? And we'll respond with a number. And if that number meets your expectations, great, we would move forward. What moving forward looks like is you'll sign our engagement letter. You give us consent to obviously negotiate on your behalf. And then typically within a month's time from start to finish, we will reach out to your processing company, handle the negotiations, and get finalized pricing from them that showcases what they're willing to offer you for new rates and fees. You guys ultimately have the last say, and you can say yes or no to the cost savings that we achieve for you. If you green light it and give it the thumbs up, they're implemented. And then from there, it's just as simple as us obtaining your merchant statement every month, auditing your account to make sure that those savings are actually in place, and then obviously just sending you a savings report that showcases where those savings are coming from, just how much we're actually saving you, and the rest is history. Those are the step-by-step process.
Feel free, anyone, if you have any questions or comments, please send them while we're on with Matt. I bet you a lot of our cost issues happen because we're not doing things properly on our end, right? We're not PCI compliant, so without, sharing all the trade secrets and how you can save us money, because you truly would be a partner for us. There could be some people that are on or going to watch in the future that might say, not exactly where I'm at, but it isn't a big deal. You've clearly shown the deal where you can save tens, and you can create a position in your company potentially with those savings. But what are some areas that you should scare us? What are some areas where you think we need to focus, or you would be able to come in and help us understand how we can make things better and more efficient?
Yeah. So one answer to your question is the monthly miscellaneous fees is a really easy way to reduce costs without even having to hire someone like us, right? So PCI compliance, for example. If you are not compliant, and I don't blame a lot of people for not being compliant, because if you don't know how to answer the questions correctly, or if you're not storing card data the correct way, if you're an e-commerce business or doing recurring payments, things like that, it can be really tedious and difficult to maneuver. But typically processing companies charge anywhere from $30 to $150 a month if you are non-compliant. Once you become compliant, that goes away, and you can typically get refunds for the non-compliance fees that they charge you in the first place, right? So taking care of that is a super simple way that you can alleviate. I mean, you're not going to buy a Ferrari with $150 a month in savings, but it's something, right? In addition to, all these processing companies have miscellaneous monthly fees. A lot of them have what's called like an analytics fee for, $45, $50. WorldPay has a fee called review trackers. If you look at it for like $25 a month, there's these little things that they're called auto enrollment costs, where when you sign the contract with your processing company, you basically, when you sign off on the terms and conditions, you give them the ability to auto-enroll you in monthly fees. These processing companies will try to tell you that they're value-added services, that they're helping you with analytics of whatever, that people go into your website, but they're both. It's just an easy way for them to make money. Those, along with the PCI costs, are, we call them fluff, easy things that you can just get rid of immediately by contacting your provider and typically getting like 3 to 6 months worth of refunds for those costs. Outside of that, I mean, it's looking at the percentage rates that they're charging you, the transaction fees they're charging you, how many times are they downgrading the cards that you're running, what does that downgrade cost look like? Now, these are all like getting really in the weeds of things, but everything from nuts to bolts we're looking at as far as where we can save you money, right? Now, another area which gets pretty high level but worth talking about is the cards that are non-negotiable that I was talking about earlier, the interchange rates, right? Depending on the types of cards that you accept, if you do any business-to-business transactions, which I'm assuming most of you guys do consumer work, but if you have any large contracts where you're doing business-to-business, whatever, with a hotel chain, let's just say, there's ways to get better rates on the cards that you accept from those businesses when you do business-to-business transactions that we can help optimize, right? A lot of people aren't aware of this. It's something that it's very high level, but that can save you almost 0.5% in cost savings if you do it the correct way. Again, these are high level things that we look at, but that's the long-winded answer to your question.
Well, can I share with you something that I think is a big challenge as a small business? If you have a small team or you wear 7 hats in your business, firstly, you can help us breathe better, knowing that you would focus on these fluff areas and all these little details. But how about just small business standard operating procedures and the way to handle it in-house on our side? Are those tools or skills that you can help us with as a client for you?
Yeah, like I guess an easy way to dive into that is like, listen, if you can swipe cards or use EMV or the tap to pay as much as possible, that's going to help lower your cost immensely. So like from a standard operating procedure, anytime someone comes in, make sure that you take that card and swipe it, put the chip in or tap it. It's going to lower your cost, right? If you have to take an order over the phone and enter the credit card data, that's fine. And if you're not on the correct pricing structure, realize that it's going to cost you more money. So anytime you can take cards in person is your best bet. In addition to that, taking debit cards is also a super easy way. That's very inexpensive for lowering your rates, but it's tough to push someone away when they want to get the points on their credit card, right? But if it's at all possible, say, hey, do you have a debit card? Which is kind of it's a funny question to ask someone, I guess, you know what I mean, on such a large ticket, issue. But that is an easy way to do it. In short, we can help walk your team through how they should be accepting the payments, where it would be applicable to help you guys lower costs, right? Typically, when we do the negotiations and we put you on the correct pricing structure, it won't matter how you take the payment, and it's as simple as doing it how your office manager does it or the person that wears multiple hats. But that's all stuff that we look at on that discovery call, getting a better understanding of how you guys do things today. You know what I mean? Long-winded answer to your question.
Yeah. And do you help with like hardware? Like if somebody wasn't swiping, would you help navigate them, or do you offer to sell it, or do you give us guidance? You know what I could use, by the way, is a shock collar that we put on every technician. And if they don't get a signature electronically, we could just jolt them right there on the spot. Do you sell that equipment, by the way?
Unfortunately, no.
No.
I might be able to find a guy, though, for you.
Oh, okay. Yeah, you're from Boston.
But,
so.
yeah, I feel your pain, right? And as far as equipment stuff goes, it's not our main area of expertise, right? But we can help you guys as much as we can. And in addition, we're here to be like your chief payments officer. So in a sense, if you guys are having issues with the equipment, or you need something new, or you need something that integrates for whatever reason, we're here to help quarterback that for you. So like if your office manager is trying to figure that out, we can take that off his or her plate, right, and help navigate and talk to the payment processing companies because we know the lingo versus them having to wait on hold, trying to figure it out. Yes, we're there to do it. As far as like super intensive knowledge and technical expertise, no. Like we know payments, but we don't know hardware, right? So, I mean, push and pull with everything, but we'll try to help as much as we can.
You never know, Matt. It's 2023, 5 years from now, again, as small businesses, and I know you deal with a lot of them, the more partners that we can have to help, the better. And then you can charge us more money too, as well,
Yeah, so there you go.
How about disputes? Do you guys help us or coach us in any way with the ever long battle of disputes? How can you help us?
Chargebacks, chargebacks are I don't want to say it's a touchy subject, but it's really unfortunate for the business owners because let's just say, for example, I'm a customer at your business, Doug, and I come in and use my Capital One card. I get the product from you, or even if it's a service request, I'm not happy with the results of the product or the service, and I go to Capital One and I charge back the transaction. There are steps that you can take to try to mitigate not necessarily the chargeback from happening, but triggers that can happen to help you reach out to me to try to mitigate the situation. Maybe say, Matt, instead of issuing a chargeback, let me send another service tech out there, service tech to fix the situation, or let me send you another piece of equipment, whatever the case may be, right? But 99 out of 100 times, unfortunately, it's going to be a chargeback and it's going to affect you. And it sucks because if you sold the product, goods or service, you're out that money in addition to paying the transaction fee again. You can supply as much evidence as you want. You can collect as much documentation before the service or product is being sold or conducted. And that is good proof to have if you're disputing the chargeback that's happened. But these banks, they're so big, a lot of the times they don't care. They're going to side with the customer because they make a ton of money from the customer. And there's really nothing you can do. I mean, there's obviously steps which I can share with the group just as a courtesy of, steps you can take. But it's a touchy subject because I hear you guys. When you get a chargeback, there's nothing you can really do. And it's like, well, we're just supposed to foot this bill and lose the product in that sense. It's tough. So
isn't it funny? You said the most horrible thing. We're screwed. There's nothing we can do, and we're at the mercy of a big bank, and it's third party, washed away. But because you said it, I feel better about myself because I have friends in the industry that say they never lose. And I'm like, gosh darn it. They also catch really big fish too, but it is a challenging thing. Something I heard recently from the bank, one of the banks, they said, because we'll put a credit card on file for a landlord. And so they say that if we send like a DocuSign with terms and they sign that there's a good chance that we have a better opportunity to win the dispute. Is that worth me going through and getting a DocuSign account and having every landlord? Is that a really good return on my investment, you think?
For return on your investment, I guess it would just depend on how many disputes you have, right? Like you got to run the cost analysis. I mean, yes, if you get a lot of disputes for whatever reason, I would say there's probably a bigger issue than getting the DocuSign signed, but it's never going to hurt, right? But like to your point, DocuSign is super expensive, right? So if you're going to pay $1,000 a month just to get this document signed and you only have 2 disputes a month, let's just say, it's like, is that worth it? You have to run those numbers. For appliance retailers and service companies, at least retailers, you're running really big tickets. So it's like maybe it is worth it. $5,000 appliance is a lot of money. For the repair side of things, you're basically charging hourly for the tech to go out there, and if you have to replace the product, so it can get expensive. Depends.
Yeah.
Open-ended answer, I guess.
Well, it's a safe way to answer that one, right? Yeah. I mean,
right.
It's getting and when I go and get it signed and I just go, it's kind of funny that means something, right? It's just a very flimsy system that we play upon, right?
Should be, yeah.
I don't see any other questions. Do you want to share any burning desires before you leave us here today?
Burning desires. I would like to see the Patriots in the playoffs this year. I know we've had our time for 20 years,
Yeah,
and
yeah.
I understand that I'm being a little greedy here, but I would like to see it. I'd like to see it happen this upcoming season.
It is a massive withdrawal for you, Matt, and I will pray for you.
Yeah.
It is hard.
Yeah.
Some teams go through this for like a 20-year period, but we know
Right.
how Boston people are impatient. So we hope you are back in the playoffs. So, all right. Well, thank you all for coming. This is a great recording for moving forward, and I appreciate your willingness to partnership with UASA because when we look at our profit loss statement, that is always low-hanging fruit that we can look at and make sure that we can save some money there. So thank you so much, Matt.
I appreciate you guys having us on. Thank you.
Have a great day, guys.